Hello everyone. Today we are going to study a charting pattern known as broadening bottom. Now, as the name suggests, bottom, which means the pattern is forming where the stock is trading at comparatively lower price than its previous history, as if the stock is in a downtrend or is trading at a 52-week low or a monthly low. And as the word broadening suggests, the pattern is like as if it's opening a face or as if it is widening. So we will study the pattern in detail. We will see a few real-time examples which suggest its past performance and will help everyone to take a trade in the future. So what is broadening bottom pattern? This is a ideal situation or a rough diagram of the pattern. As we can see, the stock came in a downtrend, then it made a minor high. Minor high means it's not a high on the chart. See, like this here, it's a minor high. It didn't form a high on the chart because this price is higher than that price. Therefore, it's called a minor high. Then formed a minor low, as we can see. Minor low, why? Because it's not the absolute low when the pattern will form. As I will tell you why it's called a minor low. Then it formed a high higher than the previous high. This point is higher than this point. Therefore, the pattern is going towards upward. It's looking as if it's going towards upward, uptrend. But then when the next low forms, it's below than the previous low. Now you can see like what I was saying about the face of the pattern. The face is opening and then it forms a high higher than the previous high. Now there are many ways we can trade in during this pattern. This is the ideal situation when the stock breaks the above trend line, gives a throwback and then continues its movement. In this image you can easily decipher what I was trying to say. The downtrend as if the stock is coming down. The broadening chart, this is the stock is forming a broadening channel. Then it gave a breakout and then a throwback occurred, after which the stock started a new uptrend. This is the basics and the most ideal situation you can find in the stock market. However, recognizing this pattern is very hard in real time because of the nature that stock prices don't follow a particular pattern 100%. You cannot find a pattern which is 100% accurate in real time. Now, what are the results when an upward breakout happens in this pattern? In bull market, the failure rate is just 10%, whereas in the bear market it is 8%. Now, in upward breakout, meaning we expect the price to go above, higher. We can buy and sell it at a higher price in the future and gain profit out of it. Failure rate is very important because that will tell you what are your chances you can earn from this pattern. Along with failure rate, what I find very important is the volume, because volume, if you study volume, you can easily find a pattern that is better than other pattern. You can easily demarcate a pattern which may turn a false or which may turn a success. Volume in a bull market upward breakout, volume trend should be uptrend, meaning volume should be increasing day by day as the pattern forms. Whereas in a bear market, it should be flat, meaning there shouldn't be any specific specific trend in the volume, not neither increasing nor decreasing. It should be as if normal. Every day the volume is similar. Now when the result come in a downward breakout meaning we are expecting it to go below or fall, meaning we will sell it today and buy it at a cheaper price in the future, thus making a profit from the difference. Now, downward breakout in a bull market has a failure rate of 16% compared to just 4% of the bear market. Therefore, in bear market, the pattern is really successful, either upward breakout or downward breakout. As we can see, as we noticed in the previous slide, the success rate or was higher in the bear market. How? Because the failure rate was lower in the bear market. Now, when we come to volume, it's the same in the previous slide. Bull market, the volume should be in uptrend. Bear market, the volume should be flat. It's same what we observed in the previous slide. So what tactics we can employ in this pattern? Profits equals difference between highest high, lowest low. Meaning, suppose in a pattern the highest high was at 120 and the lowest low was at 80. Now the difference 120 minus 80 meaning 40. If it gives a breakout above this pattern, it crosses this pattern, or gives a breakout on the downside, it crosses below the pattern, then we can expect a movement of 40 rupees in an ideal situation. Therefore, the profit should be at 40 rupees move if you go long or you go short as per the breakout. Now the second thing says trade buy after price bounces from bottom trend line with a stop loss. What does this mean? Suppose in the pattern two bottoms are formed. Now you connect those two bottoms and draw a trend line. When the price falls from the high and touches that trend line on the bottom which you drew, stand by. As the price moves above, as if it's turning, as if the trend is changing, you enter in a buy position. The say the bottom was at 80. Now the price touched 80 and we will be at standby. We will observe it closely. Now the stock moves upward 85, expecting to touch the above trend line. We will buy the stock at 85. Why not at 80? Why we lost 5 rupees there? The simple situation is we don't know if it will be a breakdown. What if you buy at 80 and the stock goes to 75, gives a major breakdown? Why to take that risk of a loss when we can, at the cost of just 5 rupees, have a certain percentage of a success of the trade? Never buy very fast. If you think it's correct but you are not in a cautious mode, or you are thinking no, I am correct, it has touched the bottom, it will go up, don't go with emotions, be practical. Now the stock came at 85, we expect it to go to the above trend line at 120 say, but we need to keep a stop loss. We don't know where I will exit the trade, where I will know that my trade has gone wrong below the previous low, which was at 80. So we will keep a stop loss at about 75. Why not 80? Simple reason. We don't know the trade was false till the time it crosses below the low. The price may come at 80, bounce from there, even 78. The price may come till 78 and then bounce back. Therefore, the stop loss should be considerably below the low, not too below, not close to the low, but considerably. That's why 875 should be the stop loss. Now, the next thing says stop loss below minor low, above minor high only. So we discussed below minor low. Now the next point says trade sell after price bounces from above trend line with a stop loss. Now what does this mean? The price has touched the above trend line at 120. Now we think it will go below as it has been doing in past. It will fall from here till 80. So we will sell the stock, but not at 120. Like I explained in the buying situation, we will wait the price to reach 115, expecting to have reversed the trend because the stock might give a breakout on the upper side, go till 125, then 130, and then give a massive breakout. So yes, we will enter the trade at 115. And similar to the stop loss in the previous case, the stop loss will be at 125, not 120, but at 125. A little, not very little, but above the high. Now, in this situation, we can make multiple trades if it stays long in that pattern, but generally it doesn't. There are there are very less chances that it will form more than two highs and two lows. Very less chances. So, what's the other situation where we can earn in this pattern? Let me give you one simple example, as in the ideal case I showed. The stock is at 100. It forms a bottom at 90. Then again it forms a high at 110. Then a bottom at 80. Then a high at 120. Then it started consolidating at 120, 110, 100. At any price it started consolidating. When the price, it can take a month, it can take 2 months, or just a few days. When the price crosses 120 or 80 on the below side, then you can enter long or short situation. That's the case other than what we can trade when the pattern is forming. This trade is after the pattern has formed. As I said you, I will be showing you some real life example. Nifty is at 8626.25. Where are we? We are on 1st November 2016, 4 years back. Now I will play the chart as if we are trading day by day. So yes, when we see the pattern formation, as it seems that Nifty has entered a downtrend. From here, Nifty has started forming this trend towards downside. So the first thing in the broadening bottom is downtrend, which we found. Now Nifty is a little volatile over here, but we can see it forms as if it has formed a small top over here. This is a bottom, this is a top. Now I will slow the speed of forming new candles, and we can see that as the Nifty is rolling and rolling, it is going down, making a new low at here. This is the second low. So we found one low. We can draw this trend line over here. I am deleting these two trend lines so that the pattern appears a little more clear. Now here we can expect the market to go up. Now it's rising, it's rising, and it forms a new top. Here it formed a new top. When I draw this trend line over here from this high to this high, we found it's it looks as if it's not right, because we can see the below trend line is a little horizontal and above trend line is a little slanting. But as I said in this video, we cannot find any ideal case. We cannot find 100% accuracy. So when Nifty is it falls a little, it falls a little, here it falls a little, but here it gave a breakout at 8600. Why it's a breakout? Because this broadening pattern has been a channel It's not a parallel channel, it's a disjoint channel from which Nifty broke. It broke, it gave a breakout on the upside. It gave a small throwback, as you can see here, it gave a small throwback and then started its uptrend. Now we can expect Nifty to go based on average about 563 points from here. So let's see how much Nifty goes from here towards upside. Nifty has nearly completed 50% of its target, nearly completing 75%. It's consolidating over here for a few candles, and see here it completed its target of 6.61%. And let's see what's the time it took from the breakout day. It has taken 32 bars, yani meaning 49 days, meaning it took about just a little less than 2 months to achieve 6.61% return. This is nifty. It won't give a return of 20% in 2 months, but if you go with stocks, you can get this much return, about 10% in a month or 15% in 2 months on this pattern trading. But I'm repeating, this pattern is really hard to find. It is one of the hardest pattern to find. HDFC Bank at 1608.80. Where are we? We are on 17th February 2021, 10:15 am, meaning it's an intraday chart of 15 minutes. I will show you an intraday broadening bottom, a successful trade, and a failure trade. Now, the first thing is a downtrend, and HDFC Bank has started to fall a little and is starting a downtrend. As we can see, it started a downtrend. It has fallen from 1620 to 1580, meaning 40 points. It fell 40 points. Now it's falling 1550. It fell 80 points from the point we observed, and as you can see, it formed a small bottom and a small high. Mm, Now, as we keep the chart progressing, as it starts to unfold itself, it started consolidating here. Now, it fell below its previous high, so we got one trend line, our bottom trend line. This is a low, this is a low. We got our bottom trend line. Now, stock started rising, and we got ourselves a top, another top. This is our pattern which we are going to observe. Now, when we see the stock is consolidating in this range, slide going down, and is going down, but it isn't touching its bottom trend line yet. Now you can see what's the real meaning of a broadening bottom. The bottom, now here it touched the bottom. Now what was I saying? Now you know the real meaning of broadening bottom. Here the difference is 1536 to 1564, meaning 25 points to 28 points. Here the difference has risen to 1527 to 1585, about 50 points. The difference has doubled. Now it touched its bottom. We don't know whether it will give a breakout or not, so we will wait on its closing moving above. Now here we will enter a buy trade. Why? Because it touched its bottom. It gave a small pullback or a bounce, but not significant to go with the long trade. Again touched the bottom, again touched the bottom, crossed it below but didn't close below it. Now it gave about 8 points above its trend line. Why just 8 points? Because this is intraday. In intraday, even 5 rupees in HDFC Bank matters. Now it again touched the bottom. It might be a false, but it isn't crossing the bottom. That's what I'm saying. Keep it below the bottom. Now it started rising, rising. Now here one thing I would like to show you here. The stop loss would have been triggered if you had kept it before, because it fell 10 rupees below its trend line. Therefore, keep a stop loss only if it closes below the trend line, not before that. Or else you would have ended up in a loss instead of having huge profits. Now we get another top. Now we can sell over here our buying position. But wait, it gave a breakout. It gave another breakout. So let's wait for the pullback. Now here the pullback occurred on an not on a closing basis, but on a price basis. It gave a breakout, then again came to touch the trend line. So we could have entered over here at 1600 or say 1606. Now what we observe is the price is falling. It gave a huge green candle, but has started falling since its formation. It is consolidating now a little. 15 minute by 15 minute passes by. It fell over here. We can see as I start, it gave a closing below this trend line. So we will exit our trade over here. Now many will think I will wait for the price to rise. I won't sell it at a loss. I bought it at say 1610. Now it's at 1605. I won't sell it at a loss. Don't be afraid to take a loss. Because what happened in this stock next? Don't face it. You can easily avoid it. Don't face it. See, the stock opened 2% below. Your intraday total gain, if you get 1%, you should be very happy, but the stock opened 2% below and it fell and fell and fell and fell again till near the bottom trend line. So what, instead of taking or avoiding a 5 rupees loss, you would have booked a 75 rupees 85 rupees loss. That's why don't be afraid to book a loss. Never be afraid to book a loss. This was a trade on an intraday basis. You can trade on this pattern on an intraday basis. ICICI Bank at 627. Where are we? 4th March 2021, 12:15 am. We will see the formation of this pattern and a successful trade. Now as we can see, the stock is currently rising, but now it's showing the signs of a trend reversal and it starts falling, thus a small downtrend. Now it has formed a minor top and a minor bottom. Some of you might not be able to see it, so this candle is a minor high and this candle is a minor low. Now as we can see, the stock is currently consolidating, but it forms another low. Thus we got our one of the two trend lines over here. Now we can see the stock moving upwards and it forms another high. we got our another trend line. Now we can do our trade accordingly. Now it's starting to move in the middle of the channel. It's consolidating over here. So we can get a breakout if it crosses below or if it crosses above this channel. Here it gave an intraday high breakout, not a closing breakout, meaning it crossed the above trend line but didn't close above it. Thus, don't take your trade now. It's now it closed above it. Now wait for the pullback. Here you got a small pullback. Now, why a small pullback? Because it didn't touch the line. It stayed here for 4 candles. You can trade on this also because not always the stocks will come to the trend line. Not always they will come to the breakout level. Now, as per ideal situation, the profit should be 15 rupees. 15.75 rupees from here. Now let's see if we will meet our profit or not. The stock is rising. We are in a considerable profit. Now we have nearly diminished our loss profit. We are currently in a loss. So should we have a stop loss? No, because the stock didn't close below the trend line. It came to the trend line but didn't close below it. It should close below it for us to book our loss. Now it closed below and we will keep a stop loss at here 615. Why 615? Because it is below its previous high of 617. Now it went above the trend line again and it started rising. Now we are in profits, and now we can see that it's consolidating. Now it started falling, but over here we it again came close to the trend line. Now over here we got our profit. Our profit target of 1575 we were able to meet. So how long did this trade took? From 9th March 9:45 till 12th March 9:30. We had only one trading day in between 10th March. So in total 4 days we booked a profit of 2.55%, which is very good when we talk in the terms of only 4 days. Kotak Bank at 1888.45. Where are we? 1st December 2020, 11 am. The stock has started a small downtrend. The first thing in our pattern. Now it has formed a sort of a bottom, a low, and a high. So we need to just wait for our second point to draw our trend line. Is this another high? No, because the high of the previous 1844 is higher than this high 1843.20. It should be considerably higher, not even just higher but considerably higher. Now it's forming and it's giving our for second low, second bottom, and hence we can draw our first trend line towards the lower side. Now it gave us our second trend line, this trend line towards the top. So yes, now we got our pattern and we can wait for the trades to happen. Now it has been consolidating in the channel range. Now here it gave a breakout. We could have entered it 1880, but it gave a break. It crossed the and entered into the channel again. So should we have a stop loss? Yes, but at what level? At this level. Why so below? Some might ask, why not over here? Why not over here? Because the stop loss has to be below its previous high. The previous high is at 1856. So we have to put it at 1846, not above it. Why? Because now you will see the stock is falling, and if we had kept any stop loss above the previous high, it would have met it and we would have booked our loss instead of what we would have got. Now see, the stock has again broken above the channel. At this point you can add to your position or stayed with your existing position. Now the trend is very positive, and the stock Kotak Bank is making a new high every few candles, and we can book our profit as per our expectation or as per our satisfaction. Some might have booked it at just a profit of 2%, 1%, some might have waited for long. But yes, this pattern is fairly successful and you can make money with this pattern. Axis Bank at 676.2. Where are we? 8th January 2021, 10:30 a.m. We can see the stock price has started to fall. It's entered into a small downtrend, very small, because you will see the price doesn't fall or falls with a consolidation in between, therefore not a sharp downtrend. And when the downtrend ends, there will be a formation of broadening bottom. We will identify it and then we will trade accordingly. Here you can see we saw one bottom and one top. The bottom is this candle and top is this candle. So we got two things in our hand, one of each. And now the stock has formed a top and is going to form another bottom so that we can make our trend line. Here it formed another bottom and here it is forming another top. So we got one trend line and now we will wait for another. So here we got our another trend line. Now we can trade accordingly as the stock moves on. Here it gave a breakout. Let's wait for the throwback. It's rising significantly, but a throwback comes. Here we will enter at 678. It gave a breakdown in the channel. We will keep our stop loss over here at 670. Again, if you keep your stop loss above it, above 669, you will book your loss but not earn the profit. Why? Because it fell but didn't close below the stop loss. Therefore, the stop loss is not booked. Here, notice one thing. This candle is 950. Never buy or never book a profit book a loss through buying or selling on the first candle of the day, because it is one of the manipulative candles. The stock hasn't picked its daily trend. If it has had closed below the line on the 15 minutes candle at 9:15, we would have booked our loss. But this is a special circumstances because it's the first candle of the day, and we can see it went below the line, came above. It's a very high shadow candle. The stock opened at 676, went down to 668, went gave a high of 680, then closed at 696. But after that, the stock showed stability in the following. Now it starts to again fall, but again crossed the channel on the above side. Now again it has entered the channel, but it's in an uptrend. We are at a profit because we bought at 676. We are trading at a profit currently. The stock is consolidating in this range, but has given a significant profit if we had booked it at 680 or 690 as per the satisfaction of every investor or trader. Now here we can see the stock has again started to fall. So what we learn from this? We learn that whenever we are getting a profit on a 1 or 2 day basis, we could have got easily 2%. Or if we had been satisfied with 1.5 or 1%, we wouldn't have to see this fall. Therefore, book your profit, keep your profits and stop losses in your mind. Whenever the price comes, don't be emotional as if I don't want to book a loss or I want to book higher profits. Yes, if you had booked 1%, the stock may go above 5%, meaning 5 times your profit. If you book your stop loss at 1% loss, then there are chances the price will go up. But both the things are, as I say, a chance, not a surety. Don't bet on these chances and lose more than you would have lost earlier, or lose what you have earned. These two things are very important in trading. IndusInd Bank at 891.30. Where are we? 25th Jan 2021, 1:15 p.m. The stock is in a significant downtrend and is continuously falling. We expect to form a broadening bottom at the end of the downtrend. Now here we got 2 points. One is a low and the second is a high. This is the low and this is the high. Now we just need to find our next low and next high. Now we are forming another low and the price is starting to fall, make a low and then rise again. Now here we got a reversal and we started to form our new high. So our first trend line is this low and our next trend line will be this high. This high we found. Why is this a high? Because the stock has consolidated there for 4 to 6 candles. It hasn't fallen, but it has consolidated. Therefore, it will be taken into account. Now we will trade accordingly if it breaks above it or below it. Now here it gave a breakout on the upside. We will buy on the pullback. Therefore, we will enter here 845.45. We have entered at 845.45. It entered the channel. Where will we put our stop loss? We will put our stop loss. The previous high is 139. So we will put our stop loss at 125 over here. Not too far away, not too close to trigger the stop loss. Now the stock has again entered in an uptrend. Now it has crossed the channel and gave a considerable profit. We bought it at 845.45, and we can easily book our profit at 922. About 60 rupees to 80 rupees we can book our profit, about 10%. It's considerable when we say that, when we think that we bought on 29th Jan and sold on 1st February, just the next day, in terms of trading or over the weekend. Therefore, this pattern is fairly successful and very good if you trade according to it, if you found the pattern and put your stop loss at the correct price.